but no reason to hold that very long. So now on our primary chart that we've been watching, there just isn't anything here that's real clear that this is a low. There's nothing here at all. So the group reversals don't show clearly that this is a time to go in, and that's why we have a separate system that tracks divergence. It is a very, very good system. It's very accurate. But we didn't have VIX divergence, and we didn't have AD divergence either. So we'll this may go up a little bit more, we don't know, but well, actually, yes, we do. One of our systems, one of our indicators, I should say, is telling us that there is a resistance level up at 972.25. So come to think of it, holding this long trade, now that we've looked at the data, holding the long trade up to 972.25 could work. I'll go ahead and show you that. Here's our support resistance workspace, and you see 972.25 up there is showing up as resistance. And we calculate resistance and support levels in a very different way. Again, I won't go into the methodology that we use for calculating resistance and support, but when we talk about those levels in our training session, what we mean is that we've found a price target that we expect to be exceeded. Okay? So when we say support, what we really mean is that price level we expect will be exceeded. Now we may get a response after that, but it isn't a price target where we expect a lot of buying to go in when we hit support. In fact, we expect buying to only take place after the support line has been exceeded, or the resistance line for the purpose of selling. And as you can see through the course of our morning here, I guess you can't see that, so let me just move it this way. When the market rallied up this morning into that high, we had all sorts of support levels below the market, and every single one of them has been exceeded. Okay. Similarly, when we hit that low, it left evidence that we were coming right back down, and it did. And we still haven't hit the low for the day by any means. We're coming back down. Now, whether we will go back up before we hit 69 again, 969. I can't tell you that. But we do have some resistance lines above where we're at right now. Okay? Now let's take a look at one other thing. We're beginning to see divergence on the AD. On the ADS-PD, we're beginning to see some divergence. And it shows up on the screen like this. What we need to see happen, however, the coloring of the bars here, blue, that's just telling us what data feed is producing the divergence. Green corresponds to the ES, blue corresponds to the AD. Pardon me, I said that wrong. Blue corresponds to the VIX, white corresponds to the AD. And now as we're coming back into the low here and hitting a new low, and there you have the divergence again showing up from the ES. This is ES divergence. Now at the moment it's not enough. There's our AD divergence. There's the white. Now you're not seeing any trades here. The system is designed to pull trades with a few other filters, if you will, and those filters haven't, those conditions have not yet been met. So there are no trades here at this low, but there's some unique features of divergence that hopefully we're going to get here. We may or we may not, but when we do, it's real convincing. And we call it gaps preceding divergence. And what you'll see if it occurs here as we move down is a series of horizontal lines emanating from the bars as we go down that indicate that there's some gaps in data as we move down. And that's a real effective tool that we use for determining where a bottom is. So we'll just have to see whether that in fact takes place. But right now you've seen the four different bar colors that identify where we're getting divergence from. The VIX just hit 25.38. You remember 25.36 was a target? It just hit 25.38. What we had indicated before is that the VIX, in order for the VIX to be divergent, we should be hitting